Hi, my name is Shannon Francis, and welcome to this presentation on virtual asset service providers. This is a new addition to the guidance notes. This edition was published in the Extraordinary Gazette, number 9, which is dated Wednesday, the 5th of February, 2020. Please note also that the title of the guidance notes was amended to include proliferation financing. The Virtual Asset Service Provider Edition is included as Section 1 in Part 9 of the guidance notes. Now, you may have heard of several examples locally and from around the world on the use of virtual assets for money laundering, terrorist financing, and proliferation financing purposes. You can research the examples that I'm about to present to you. One example is the Western Express Cybercrime Group. They laundered the proceeds of their stolen credit card numbers and stolen personal identity enterprise through their use of virtual assets and various bank accounts. Another example is the Hamas funding efforts via Bitcoin. Now, this was identified by a blockchain analytics firm as including several Bitcoin wallet providers, including one that was incorporated in the Cayman Islands. And the last example was a company called Liberty Reserve. It's a Costa Rica-based unregistered money transmitter. They laundered over $6 billion in illicit proceeds via the use of its virtual currency. Before I discuss the amendments, I would like to take a few minutes to provide background on the justification for the amendments. The background will look at the FATF recommendations and the AML-CFT legislative framework in the Cayman Islands. Please keep in mind that the background discussed here is in relation to virtual assets and virtual asset service providers only. So the FATF recommendations are the global AML-CFT international standard. In 2018, the scope of the FATF recommendations was amended to include both virtual to virtual and virtual to fiat transactions or financial activities or operations, as well as the provision of virtual asset service. The FATF recommendation number 15 requires that countries and financial institutions identify and assess the money laundering and terrorist financing risks that may arise in relation to the development of new products and new business practices. In addition, financial institutions should be required to undertake risk assessments prior to the launch or use of such products, practices, and technologies, and take the appropriate measures to manage and mitigate the risks. In June 2019, the FATF added the interpretive note to Recommendation 15, which sets out the application of the FATF recommendations to virtual asset activities and virtual asset service providers. Following the December 2017's mutual evaluation by the Caribbean Financial Action Task Force, CFATF, on the AML-CFT framework in the Cayman Islands, a range of focused assessments at the national level were also conducted in 2019. These risk assessments declare activities relating to virtual assets to carry a higher money laundering and terrorist financing risks. Also, you will note the AMLRs came into force in October 2017. In June of 2019, Schedule 6 of POCO was amended with regards to the activities falling within the definition of relevant financial business. This amendment was so that virtual assets and virtual asset service providers are covered in the definition. So activities such as money or value transfer services, or issuing and managing means of payment, including electronic money, or providing virtual asset services will all cover virtual asset and virtual asset service providers. In addition, the definitions of virtual asset and virtual asset service are added to the POCL. Under the POCL, a virtual asset refers to a digital representation of value that can be digitally traded, transferred, or used for payment or for investment purposes. Examples of virtual assets include virtual currencies and crypto assets. The POCL defines a virtual asset service as the business of conducting activities or operations for or on behalf of a person. A list of such activities can be seen on the slide. In the guidance notes, a virtual asset service provider is a natural or legal person which falls within the scope of the definition of virtual asset service by virtue of the activities it carries out. You will recall that virtual asset service is defined in the POCL, as I mentioned previously. Virtual asset service providers, such as registrants and licensees of the authority, financial providers, such as registrants and licensees of the authority, are considered virtual asset service providers if they carry out a virtual asset service. So now that I've finished a brief summary of the background for the addition to the requirement for virtual asset service providers to the guidance notes, I will discuss the guidance notes part 9. The guidance notes part 9 must be read in conjunction with part 1 and part 2. I will now summarize the various subsections of this part of the guidance notes. The subsections are from A to J. I will provide a brief overview of subsections B, C, and D. Subsection B presents the scope of the application of Part 9. Understandably, the scope does not capture all instances, cases, or examples, as business models in the virtual asset space vary. Regardless, the considerations of whether or not a natural person engaged in virtual asset activities is considered a virtual asset service provider are as follows. A, whether the person is engaged as a business in any other POCL Schedule 6 activities, and whether the virtual asset services are conducted for or on behalf of another person. And B, whether there is custody or control of the virtual asset on the part of the person that conducts the business for a customer. Remember that the POCL defines virtual asset and virtual asset service. These definitions are also found in subsection A, paragraph 3 of Part 9. Both of these conditions in subsection B are essential elements in deciding whether or not a person engaging in virtual asset activities is considered a virtual asset service provider. Subsections C and D discusses the requirements for virtual asset service providers to conduct risk assessments as per Section 8 and 9 of the AMLRs, and to implement policies, controls, and procedures to manage and mitigate the risks. While subsection C provides a non-exhaustive list of considerations that should be taken into account when the virtual asset service provider carries out its own risk assessments, subsection D also clarifies that any other risks as identified in a Cayman National Risk Assessment should be taken into account. Subsection E captures the pertinent elements for customer due diligence and enhanced customer due diligence. Virtual asset service providers should also apply the requirements of Part 7 of the AMLRs, which covers due diligence on politically exposed persons. Pursuant to the AMLRs, virtual asset service providers have to apply the full set of customer due diligence measures or enhanced customer due diligence measures where relevant. Please note, as per paragraph 2 of subsection E, that in cases where a virtual asset service provider is carrying out a one-off transaction, the designated threshold above which the service provider is required to conduct customer due diligence is 10,000 Cayman Islands dollars, as per section 11 of the AMLRs. Also note that section 11 of the AMLRs states that not only does a transaction count if it's carried out in a single operation, but also if it's carried out in several operations of smaller value that appear linked. Another item from subsection E that I'd like to point out is paragraph 5, which states that if a virtual asset service provider is unable to obtain customer information, the transaction should not proceed, and the virtual asset service provider should consider filing a suspicious activity report with the FRA. Subsection F discusses ongoing monitoring. Once the virtual asset service provider has established the customer business and risk profile, they are now able to determine the level and type of ongoing monitoring of the customer and to make decisions regarding the business relationship. So whether the risk profile is applied at the individual customer level or at the cluster of customers level, the risk profile should be monitored and periodically updated as necessary. Risk profile having been established, the virtual asset service provider can carry out ongoing monitoring, and not only with regards to the customer's documentation, but also with regards to the customer's transactions. Monitoring transactions should be carried out on a consistent basis and using the risk-based approach. Virtual asset service providers should screen its customers' and counterparties' wallet addresses against any available blacklisted wallet addresses that countries might have made available. Ongoing monitoring of transactions may identify transactions that do not fit the behavior expected from a customer profile or that deviates from the usual pattern of transactions. For more information with regards to ongoing monitoring, see Part 2, Section 4, Subsection H of the guidance notes. Please also note that there was an amendment to ongoing monitoring section of the guidance notes. And this amendment was published in the Extraordinary Gazette, number 9, dated Wednesday, the 5th of February, 2020. Please review the presentation slides on ongoing monitoring presented by another member of the Policy and Development team. Next, I will discuss subsections G and H. Part 8 of the AMLRs lay out the record-keeping procedures for relevant financial businesses. The goal of record keeping is, amongst other things, to capture information obtained through customer due diligence, maintain a record of all transactions which is sufficient enough to reconstruct individual transactions, and to retain the records for at least a 5-year period after the termination of the business relationship. So the Guidance Notes Part 9 speaks to records and information being in line with Part 8 of the AMLRs, which basically means that virtual asset service providers are to maintain transaction records, understanding that the goal is to be able to identify relevant parties, addresses, transaction amounts, and the nature of transactions, etc. Virtual asset service providers are to note that the public information on the blockchain or any other relevant distribution ledger is not considered to be by itself sufficient record keeping. The Guidance Notes Part 9 goes into a bit more detail as far as this consideration is concerned. Also, additional information and procedures is necessary in order to associate the wallet address to a private key controlled by a natural or legal person. With regards to subsection H, virtual asset service providers are under the same obligations as any other FSP when it comes to sanctions compliance. Therefore, virtual asset service providers are to ensure that no assets, including virtual assets, are made available to or for the benefit of persons or entities related to terrorism, terrorist financing, or proliferation of weapons of mass destruction. Please note that there was an amendment to Section 13 as well as an inclusion of a Section 15 of Part 2 of the guidance notes. These amendments were also published in the Extraordinary Gazette No. 9, dated Wednesday, the 5th of February, 2020. Please also review the presentation slides on targeted financial sanctions, which was presented by another member of the Policy and Development Division. Subsection I discusses reporting procedures. With regards to reporting procedures, virtual asset service providers should have the ability to 1. Flag for further analysis any unusual or suspicious movements of funds, transactions, or activities, and 2. Have the appropriate systems so that such funds or transactions are scrutinized in a timely manner and pursuant to Section 19 of the AMLRs. Promptly report suspicions of money laundering or terrorist financing to the FRA. This subsection lists some indicators of suspicious activities related to virtual assets, as well as lists some suspicious activities indicators from an ICO perspective. Finally, subsection J discusses the information that virtual asset service providers should keep with a virtual asset transfer. The POCL defines what a transfer is in relation to a virtual asset. When engaging in or providing services related to transfers of virtual assets in or from within the Cayman Islands, virtual asset service providers are subject to the wire transfer obligations as set out in Part 10 of the AMLRs. Therefore, originating virtual asset service providers and beneficiary virtual asset service providers have certain obligations which are laid out in the guidance notes. The required information for a virtual asset transfer is set out in paragraph 3. I trust that you found this short presentation useful. For additional information, please review the following resources. The FATF guidance for risk-based approach. You can click on the link. One of the objectives of this guidance is to assist countries and virtual asset service providers in understanding the money laundering, terrorist financing risks associated with these activities. It may also be useful to review FATF's interpretive note to Recommendation 15, which clarifies applicability of the recommendations to virtual assets and virtual asset service providers. Please click on the link to review. Interpretive note to Recommendation 15 starts on page 70. And finally, all relevant legislation as well as the guidance notes and its amendments are available on the authority's website. In this presentation, I provided the background for the additions to the guidance notes, as well as a summary of each of the subsections in Part 9. Please be sure to read the guidance notes for the detailed requirements. If you have any questions, please email the Policy and Development Division at the email address you see there on your screen.